Accounting for manufacturing business. Format of balance sheet for a manufacturing business. Or format of a statement of financial position. Cambridge Accounting. Commerce Lecture Online. This is how the financial position statement should be prepared for a manufacturing business. We have to prepare 3 columns. There are 2 main parts, assets and capital and liabilities. First, we are working on the part of assets. Assets will have 2 parts, non-current assets and current assets. Non-current assets are to be shown with their cost along with their accumulated depreciation. Accumulated depreciation always shows the depreciation up till that date. We want a total of non-current assets. Therefore, whatever non-current assets are given to us in the question, they all to be listed here along with their depreciation provision. Their depreciation is to be subtracted and the second column will represent book value of the non-current asset. For example, property, land and building has cost of 40,000. Its provision for depreciation for this year and previous year are total 30,000. Therefore, the net book value of property, land and building is 10,000. We are making a list of net book values in the middle column, and finally the total of all non-current assets will be written in this third column. Factory equipment cost is, for example, 1,60,000 and provision for depreciation factory equipment are, for example, 76,800. We'll subtract its provision and we'll write its book value in the middle column. Then if we have more non-current assets, they will be written in the same way. If the provision for depreciation for any non-current asset is not given in the question, then its cost will be written in the middle column. Make a total of non-current assets and write the total non-current assets in the third column. After working on non-current assets, let's work on the current assets. The business for a manufacturing business will always have its inventory in 3 forms. We have to write the ending inventory of raw material, work in progress and finished goods in the first column, and the total of these 3 types will give you the total of ending inventory. For a manufacturing business, we'll always show the ending inventory with all 3 forms, that is raw material, work in progress and finished goods. So this is our first current asset for the business, that is inventory. Then we'll make a list of more current asset. Trade receivable is another asset which needs to be worked on. Therefore, trade receivable value is to be written in the first column and we will deduct its provision for doubtful debts from it, and net trade receivables will be listed here. Our first current asset, our second current asset. Then if we have more current assets like any prepaid expense or bank or any other current asset, it will be listed here in the second column, and we'll show the total of all current assets in the third column. Half of the balance sheet is the total of assets. So total non-current assets and total current assets will give us the total assets. Total assets are always equal to the total of capital and liabilities. When we are done till total assets, the remaining half portion is about capital and liabilities. Let's start working on capital and liabilities. Let's start working on capital portion first of all. Capital is to be written in the middle column. Net profit which we calculate in the income statement is to be added with it. If suppose we have net loss, then it is to be subtracted from capital. After getting the final answer, we'll subtract the drawings from this answer. Whatever drawings are given in the question, they are to be subtracted, and our final amount will represent the total capital at end of the year. This total capital is to be added with total liabilities. Liabilities will have 2 portions again, non-current liabilities and current liabilities. Non-current liabilities are to be listed in the middle column. If we have only one non-current liability, then we'll work on the current liabilities portion. Current liabilities could have any payables or any accrued expenses. It could have trade payable as well. If there is any other current liability, it is to be listed here, and the total of current liabilities will be taken to the middle column. The total long-term or non-current liabilities and the total current liabilities will be added, and it will show us total liabilities. Total liabilities should be added with the total capital, and this is how we'll get the total of liabilities and capital. The total of liabilities and capital will always be equal to the total assets, otherwise there is any mistake in the statement of financial position, which is also known as the balance sheet. The same format could have a different presentation style. Non-current assets could be presented in a different way as well, although the calculations will be the same. Let's have a look on the different format of non-current assets. The format mostly used in the CIE solutions which are provided to you on their site are in this style. They make 3 columns like this: cost, accumulated depreciation, and net book value. The non-current assets are shown at their cost in the first column, their accumulated depreciation in the middle column, and after subtracting accumulated from cost, the net book value is shown in this column. This is a concise style of writing the list of non-current assets. This is to be done for all the non-current assets, and the total of their net book value will give us the total non-current assets. The current asset and capital and liabilities portion is done in the same way, only the presentation style of non-current assets could be either in this way or in this way. Both are giving you the same amounts, only the presentation style differs a bit. So you can follow either this or the previous one. Both will give you same marks. Hope you are clear about the format of manufacturing business statement of financial position. Like, share, subscribe. Commerce Lecturer Online.